Hello everyone. In this video, I like to discuss about one of my heartburn issue in Indian economy, and of course, this is a stock market channel. So I like to discuss how we can find when the market is bottoming out in the bear market rally. I know we are not yet in bear market, but still if it happens, how we can find it out when it reaches the low and when we can start to take the position. Anyway, let's get into the topic. Day before yesterday, I mean on 29th December 2022, Indian current account comes as deficit of all-time high of near 37 billion US dollars. At present, 1 billion US dollars is roughly equal to 8,250 crore rupees. So, 37 billion US dollars at present is roughly equal to 3 lakhs and 5,000 crore rupees. It means as we Indians who living inside India in the September quarter bought either a product or a service worth 3 lakhs and 5,000 crore rupees, more than that of what as a whole people living inside India sold into the world. In simple words, we are buying and we are not selling enough. To be frank, I have been tracking this current account metric since 2012-13, those periods. Honestly, I don't know when this will change. The worrying thing here is PPP conversion. PPP means purchasing power parity. As per World Bank data, the PPP purchasing power parity conversion factor for India in 2021 is 23.22. In simple terms, for example, for any goods or service or work done by Indians will be purchased by the external world for 23.2 rupees. And if the same work or goods or service, if India wants to buy from US means it costs roughly 83 rupees. Basically dollar conversion. So think in this way, if this pen was made by Indians, I can buy it for 23 rupees from India. If US people want to sell the same pen back to India, then the people in India have to pay 83 rupees without any value added. This can become better only if India becomes current account surplus. I hope that will happen in future and hoping the PPP conversion factor for India will increase with dollar parity. Anyway, the similar current account deficit problem was happened in 2013 and it severely affected the Indian rupee value. I know we blame US for doing the taper tantrum in 2013, but the real issue was in the fundamentals of the Indian economy. And that caused the stock market to crash in 2013. I genuinely hope that won't happen in 2023. But if it happens, how to find when the market reached its low position? There is no straightforward answer to this, but combining these three parameters together, we can probably judge the low value. First one, a VIX spike. We all know VIX is the market fear gauge. So most of the time, almost all the time, market will be bottomed out in 1 or 2 weeks from the day VIX got a huge spike. For example, let's see the VIX in during 2020. On 27th March 2020, VIX reached the peak of 70. Now let's look at the Nifty chart. On 3rd of April, it reached the bottom and then it started to move upwards. So exactly 1 week after VIX reaching its peak. In stock market, always if we add more number of data, the more fine-tuned the accuracy. So I recommend while considering the India VIX, add S&P 500 VIX in conjunction with that. In this way, we can add the global momentum factor. Then the second one, there should be a spike in put call ratio. I can't able to find the history of Nifty put call ratio chart, but I can able to get the US one. So please have a look here. During pandemic bottom, put call ratio spiked to over 1.83 and during 2018 bottom, it again spiked to over 1.82 and the same in 2008 as well. That's the reason we always need to be vigilant on put call ratio. Then the third one, stocks 200-day moving average. For example, in Nifty 50, if more than 40 number of stocks traded below 200-day moving average means, then most probably the market reached its bottom. I mean for any index, if more than 80% of the stocks traded below 200-day moving average means. For example, for Sensex, it has to be more than 24 stocks out of 30 in it. There are various websites who give the list of Nifty 50 stocks above and below any moving averages. In the description, I'll provide a couple of websites link. So that combines these three I mean spike in VIX and spike in put call ratio, and more than 80% of the stocks in that particular index trading below 200-day moving average, we can able to judge the low if similar to 2020 happens means. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and it will also motivate me to do more. Don't make any investment decision based on this, as I'm not a SEBI registered advisor. I am doing it for my and viewers educational purpose only. Thanks for watching.